Folks, I don't know if you've seen this, but just a minute ago on fortune.com, there was an article published talking about the 27 housing forecasts from bullish to bearish. And we are so lucky at One Rental at a Time. We have the author of that article, and we are going to go through it in real time and debate it. And yes, folks, you will, of course, get a bonus 28th person's opinion, my own. But let's talk to Lance Lambert. How you doing, Lance?
Doing great. Housing. Always a lot going on right now.
Yeah, and price is a very hot topic. So I look forward to this. I look forward to the range. I have yet to read your article because I knew we were speaking at 10 a.m. So why don't you take over and let us know about the 27 housing forecasts, bullish to bearish. This should be a lot of fun.
Yeah. So last May, fortune.com, I had an article and the headline had something big is happening in the US housing market right now. And it was pretty much just talking about the fact that spiked mortgage rates would see housing activity really fall off a cliff, right? And that's exactly what we saw. And now housing activity isn't really a debate. Everybody's kind of bearish in that regard until mortgage rates start to move up. The real debate is price, and
Yep.
people are all over the place.
Yes.
All over
Yes.
the We have some that are thinking that prices could go up a little more. We have some that think, 20% drop, which in my mind, 20%, that's kind of in the crash territory.
Oh, for sure.
Uh,
Mhm.
so
Well,
uh,
let me just make sure. I want to level set the article for folks. So again, when we are saying price or bullish to bearish, we are, of course, talking about median home price, just so we can level set that. Is that correct?
well, the indexes, so
Okay,
it'd be
so
like the
Case
reliable
Shiller.
Case Shiller, yeah, repeats, yeah.
Okay, so again, but it is the country. It's not, I'm going to pick out Phoenix, Arizona and talk about Phoenix. We are talking about national numbers.
Yes, exactly. And on a national basis, home prices rarely decline. It'll happen
And
in
then
regional markets like South Dakota if there's, the natural gas bust
right.
or, something in that regards. But
And the second thing I want to talk about before I let you pull this up, just so we're all on the same page. So national numbers, and are we all these calls about 2023, or did some of them get loosey goosey and say 2024, 2025? What are these
yeah,
calls?
they're all over the place. There's no,
Okay.
if in an ideal world, how I would like it to be is that everybody would email me. So I
Just email you. Yes.
not my competitors, just me, and give the actual index number for the
Oh, of course.
seasonally adjusted Case Shiller. Then, we would have a very apples to apples comparison. We wouldn't even need them to tell us the percent down because we could just calculate it ourselves.
Perfect.
But right now we don't have that. Some do Case Shiller, some are using seasonally adjusted, not seasonally adjusted, some are annual, quarterly, monthly. We're
Of
all over.
course.
And
Well,
so
thank
like
you for pulling this together. So I will be quiet and just absorb now. Thank you.
Yeah, and so the framing here with the something big is happening in the housing market is just the fact that in the past we had 124 months of month over month positive growth in home prices as calculated by seasonally adjusted Case Shiller, and we've since seen 4 months over months of declines. So it's a question of where do we head from here, and how much of the gains could we hold on to, or in a few of the cases they think we could get some of the gains we've lost this past 6 months back.
Okay.
But let's get into it. So real quick before we jump into them, here's what it would look like if there was a 20% drop. It would take us back to February 2021. And if there was a 10% peak to trough drop, it would take us back to February 2021. And right now we are at just above April 2022 levels. So peak was June 2022. We've since came back a little under April 2022. So even if there was 10% drop peak to trough, we're talking about going back another 5 months. And 20 would be going back about 13 more months.
Okay.
Which is kind of crazy to think about, but that's just how fast home prices went up during the pandemic housing boom. The first one we have is my old employer, Realtor.com. The economics team there predicts that median existing home prices will rise 5.4% in 2023.
Wow.
Historically speaking, 4.6% is the annual average since 1987. So 5.4 would actually be, higher than historical average, which is kind of crazy to think about. And I'm guessing, and I've seen some of their work. I'm sure they're leaning into the fact that inventory is so tight for that prediction.
Yeah.
Home,
Yeah, and I do find it interesting that they assume that appreciation with what I would call relatively high mortgage rates, right? 7.4 was above the peak that we saw last year. So again, just reading this lines, I'm guessing they assume prices would go up higher if the rates were 6.4.
they are the most bearish on mortgage rates
Wow.
and bullish on prices. Now
That doesn't make sense. That's not normal, but okay.
personally, I think the proof that we've seen this year in terms of like as mortgage rates got even higher, we started to see some of the drops. We started to see the bubbly markets kind of roll over fairly fast in like Vegas and Reno and some of those places. So I dispute their framework.
Okay, fair enough.
But also that's median price of existing homes, and I don't really mess with median price of existing homes. I'm more of a Case-Shiller guy.
Got it. Understood.
Home LLC, they predict home prices to rise 4% in 2023. I talked to Nick, their CEO. It's very much because inventory, we've never had months of supply be under 6 months. We're currently like 3.6, 3.7, and seen prices fall. So his belief, inventory will keep some appreciation in the market.
Okay.
And if you hear any noise in the background, that's just my 1-year-old. He probably wants some more animal crackers.
Wait, what's his name, just so we know?
Leo Lambert.
Oh, Leo Lambert. Very cool.
Another LL. Core Logic, they believe that home prices will rise 2.8% between November 2022 and November 2023. One thing to note about them is they do believe that most of the country is still at risk of year-over-year home price drops. But which, of course, if you're going to have a 1 or 2% positive or negative forecast, there's going to be a high chance that it goes one way or the other. And they do think that in Q2, at some point, we'll hit a negative year-over-year reading. But then I'm guessing they think in the summer there will be enough appreciation, which is kind of interesting, not spring, but summer, to kind of to still have a positive November over November.
Okay.
And NAR thinks that existing home prices will rise 1.2%. They think mortgage rate 6.3. Freddie Mac, they think a 0. And now we're moving from the 4 that think prices will rise over the coming year to the 23 who think prices will fall.
4 out of 27. I gotcha.
But this one doesn't really count. It's in the fall, but I wouldn't really count it as fall.
Yeah, it's flat. Yeah.
0.2. But they do think that there's a downside risks are elevated right now.
Okay.
Mortgage Bankers Association, which the funny thing is, of anybody, they were actually the most right in terms of mortgage rates because they thought mortgage rates would be 4% in 2022. And we got up to 7. That tells you how off the industry was coming into 2022. They think prices will fall 0.6 in 2023 and another 1.2% dip in 2024. Average mortgage rate of 5.2 in 2023.
Wow.
4 in 2024. They are the most optimistic.
5.2. Ooh.
Yes, they think that rates are going to really move down this year.
Okay.
And in terms of prices, I really consider that kind of still on the flat. 0.6, 1.2.
I think that's fair.
Zillow, and Zillow is interesting because they were the most bullish in heading into 2022 and really remained really bullish even as mortgage rates started to spike. I know in like April 2022, they thought we would get another 17.8% appreciation over the next
saw that.
months.
That was crazy.
And so every month I share that forecast as it's really been cut really fast. And at one point in summer 2022, they revised their methodology, and then they had a 1-month drop from guessing that prices would jump 7 something over the next 12 months to 2. And then since then, they've just chipped down a little bit. And I have some details Well, those are on background discussions. I have some understanding of what they did, but
Okay,
can't
that's
get
fine.
into all of those. Fannie Mae, economists at Fannie Mae think home prices moved down 1.5 in 2023 and 1.4 in 2024. They think
That's interesting. We're actually seeing more and more people saying this is not going to be a 1 year kind of negative. It's going to be a slow bleed for a couple of years. I think that's interesting.
Yeah, I think they're basing that on, well, the Moody's belief, Zandy, which even if you don't agree with Zandy in terms of where he thinks prices will go, I think his framing is agreed upon by a lot of people in the industry, which is transactions bottom first, which we
Hmm.
might be starting to see with sales early this year.
Agreed.
Which the mortgage purchase applications kind of indicate maybe.
Hmm.
And then we'll get a bottoming in permits and housing starts. And then afterwards, the very last one to bottom would be prices,
Okay.
which is kind of how Fannie Mae's framework sees it too. But Fannie Mae, different than Zandy, is they don't think there will be much drop in prices,
Hmm.
just kind of really flat through that and just kind of chipping away slightly.
Yeah.
Okay, Redfin, they think 4% drop in prices, but that inventory will act as a floor from, any type of scenario in the US where there's like a falling knife
Yeah.
effect.
It's
Amherst,
interesting. They're talking about listings, and that's something I've seen is, we're getting days on market to go up, and I think they go up meaningfully from here. But new listings are trending down pretty significantly.
yeah, exactly. Amherst, which is a huge owner of single family homes in the US, they think prices fall 5% between September 2022 and September 2025. Let me read this quote from their CEO. They told my colleague Sean Tully, incomes are the other side of the seesaw for mortgage rates and setting home prices. We saw no middle income wage gains for decades. Now it's happening big time. Higher rates are a headwind, but rising incomes are a huge support and tailwind.
I've been calling for this all year. We actually got the ADP report this morning that said wages were up 7.1%, and if you change jobs, up 15%. Leisure and hospitality was up over 10% as a subcategory. So, yeah, I think we have 3 or 4 years of wage inflation. The employee has the power, and they will get theirs over the next couple of years. Is something I see coming.
Wells Fargo, they think a 5.5% drop in 2023. So that's kind of moving into like the 8% peak to troughs. They think the white hot markets in the Mountain West that saw influx of remote workers during the pandemic will get hit harder than some other markets. Makes sense intuitively. Capital economics peak to trough, 8%. They're pretty much close to Wells Fargo. Goldman Sachs, they have an outlook of a 5 to 10% peak to trough drop, but the actual model is 7.6. So that's another thing to bring it. Well, I'll bring it up in a second when we get to Moody's. ING, you'll see a lot of headlines for them that they think home prices could fall 20%. I reached out to them a few months back and they said, well, if we fell 20%, that would bring us back to fundamentals, but their actual outlook is a 5 to 10% drop. And in nominal, you don't necessarily, there's no rule that you have to get back to fundamentals like that.
Oh, yeah.
In
Yeah.
a nominal basis, real basis, maybe, and we've had those discussions. The housing market downturn triggered by a rapid increase in mortgage borrowing costs continues to cause significant concern. Nothing too new from them. Bill McBride. So
Oh, I
Bill
like
came.
it. Bill's a great follow on Twitter, by the way. I like his blog.
Bill's great, and Bill is really just about like the datas and the numbers.
Mm-hmm.
And there's nothing flashy about it, and he does a great job. So when mortgage rates spiked initially, Bill was kind of like, okay, this looks like 1981. I think that prices will probably go flat.
Mm-hmm.
As the summer kind of we got some of the pricing data and started to see things moving down out west and some of the boomtown markets, Bill revised that a bit, and he expects that U.S. home prices on a nominal basis fall 10% from the peak. And he thinks on a real basis, we get like a 25% drop in the next 5 to 10 years. And the biggest thing Bill has in terms of why this is a 1981 in his view is that he's seen in the data that some of the usual stickiness isn't maybe necessarily applying this time because prices went up so high so fast. Keller Williams Realty's chief economist, 10% peak to trough bottom, but Ruben thinks that that'll happen in March or April this year. So really quick bottom. TD Bank, peak 10% peak to trough. These 10% peaks to troughs are now becoming, they've kind of become the center of gravity in a lot of these housing forecasts. But he thinks that home price growth will find its footing in the start of 2024.
Okay.
And with that 10%, 5.7 drop this year, 2% 2024, and of course what we've already seen in the latter half of 2022. Morgan Stanley, this one's my favorite, not because I agree with their prediction, but because I love how Morgan Stanley does their forecast. What they do is they create a baseline forecast, which in this scenario is a 10% drop from June 2022 to the bottom in 2024, which includes like a 4% drop this year. But that's their baseline. Then they also create a bear scenario and a bull scenario. And in their bull scenario, we just stop no price drops this year, which is that inventory ends up just being resistant enough to weather this affordability storm and prices don't fall. The bear scenario is that inventory would move up much faster than expected. Things would get worse with the economy, and we get a 20% peak to drop, including 8% this year.
Oh, wow.
So what I kind of like with that is just the fact that they acknowledge that there's an uncertainty, right? Like nobody, like there's a lot of different ways this could the cookie could kind of crumble here. And so I like that. Moody's, if you read the headlines, they're always outlook 10% drop. I actually get the model numbers, which are broken down quarterly. And the model is actually like an 8.8% drop, but the outlook, they just say 10. If recession, Moody's thinks 15 to 20% drop nationally. And, Mark says that prices feel a lot less sticky this time than they have historically. And it goes back to the fact that they went up so quickly during the pandemic and sellers are willing to cut their price here rapidly to try to close the deal. Rapidly doesn't necessarily apply in what we've seen in the data nationally so far. That is maybe kind of true with iBuyers out west and sellers who sell in those markets that have fallen. Ivy Zelman's group, Zelman and Associates. I haven't talked to them, but they told the Wall Street Journal they think prices will fall 12% between 2022 and the bottom in 2024. Zonda, and they do great work, Zonda too. Ali Wolf, the chief economist over there, she foresees home prices falling 15% peak to trough. I talked to Ed Pinto yesterday. He is thinking that home prices fall 15 to 20% peak to trough and bottom out either this year or next year. CoStar CEO, Andy Florence, and he's a really interesting guy. He said people who think a 10% drop are dreaming, 20% drop is more comfortable, and they're a big commercial real estate company. But that's his outlook. That's not an actual forecast model.
Understood.
KPMG, now we've started the past few to get into the way more bearish territory. KPMG, one of the big four accounting groups, they think a 20% drop from the fourth quarter of this year to the fourth quarter of next year.
Oh my God.
And they think it's a self-fulfilling momentum, pretty much a falling knife. One thing I would say with this is we've never seen home prices fall that fast.
We have never seen home prices fall that fast in half that fast in a year. Yeah, the record I've seen is 8.9% nationally. This is 20% in a 12-month period. Are you kidding me?
Yeah, and that's not some like soft metric. They're forecasting it on the Case-Shiller. So this one is like, that would actually have to be real. Things would have, Leo.
It's okay. Yeah, I can't really hear him. So if you hear him a lot, I don't hear him barely. So you're good.
What was I going to say with that one?
You
Yeah.
were basically saying this is not a soft number. This is something all of us can follow.
The 4 drops that we've gotten, which is 2.4% in Case-Shiller so far. I'm going to get up real quick.
Sure, no problem. We get to see Leo maybe.
He was not a happy camper for a second. He was
That's
getting
okay.
mad, chucking animal crackers everywhere.
Give me more. Sorry.
Yeah.
It's okay.
So if home prices are down 2.4% in the seasonally adjusted Case-Shiller, if that were to continue for 12 months, they would be down 7.6.
Exactly. So they have to accelerate meaningfully.
Yes. And the last Case-Shiller was actually decelerated to 0.3% drop. So things would have to change. And really, that would have to happen in the spring market, which is when there's the most resistance against dropping. Usually the drops are
winter.
But yes, things would have to change for that to happen.
Yeah.
Guild Street, 20% drop is what they believe. And in the new construction, putting a lot of downward pressure there. Pantheon, and I haven't talked to them, so this is from other outlets. They think existing home prices down 20. And then John Burns Real Estate Consulting, which was the first group to come out and think that home prices.
Hi, Leo.
Hi. You gonna say hi?
Oh, hi. How are you? Look at me. I got a dog.
And so John Burns Real Estate thinks a 20 to 22% drop if mortgage rates stay over 6%. And they think a lot of the downward pressure is coming from the investor side. Investors who got kind of over their skis, over leveraged, and were taking a flyer on buying a home because of upward home prices, thinking they're going to rip higher, and then now having to pull back. So those are the 27.
Well, very cool. I will give you a 28th. Actually, I have 12 real estate predictions for 2023. I will run through them very, very quickly. Number one, days on market are going to go up 150%. Again, the housing market, as you say, housing. It's a lot of collection of things. So again, I think days on market go up 150%. I think transactions bottom around 3.9 million. We're almost there, right? So we're getting close.
Yeah.
I think the March 15th or the spring selling season ends as a thud. I don't think a wave of inventory is coming. So again, it's not going to lead to lots of price drops. I think the average mortgage rate is under 6%. I can't see 5.3 being the average. I think the most painful part of the real estate market's actually going to be office. I talked to commercial as well, so office is going to be trouble. I think San Francisco is going to be the worst office market. I think LA County, because of the eviction moratorium was once again extended, is going to lose 40% of their mom and pop investors over the next 2 years.
Wow.
I think rents in multifamily fall 5%. I think single family is flat. I think iBuyer markets, i.e. Phoenix, Reno, Sacramento, Austin, fall 25% peak to trough, but then bounce back 10%. Because again, I think iBuyers sell quickly, they burn the bridge, and then the natural market takes over. I think the crash bros will once again create a new reason for the crash coming in another 6 months. They always are delaying. I actually did call out John Burns, interestingly enough. I said John Burns by May will change their model from 20 to 22% to 10% drop. And then the last thing, because I've been bullish all year, meaning no negative year-on-year numbers. I think we will go negative year-on-year for 3 or 4 months next year, probably April, May, June, maybe April, May, June, July. But we will end December, so December 23 above December 22. So those are my calls in a very quick rundown. I have a whole video on my channel with my 12 predictions. So
you're kind of a little closer to CoreLogic. I think they might have had 1, 2. You got 4 there. And one of the reasons that in February 2022 I started sharing all the housing forecast is it was obvious that they were going to change, right? Because mortgage rates had spiked. Even if prices didn't drop, then the appreciation was going to get sucked out of the market.
Correct.
Which I was then calling great deceleration, but I kind of backed off once it looked like prices could actually drop. But following all of them, you can kind of see the trajectory shifts and what the data is telling them, right? So right now, the past 6, 7, 8 months, it's always been downward, 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 downward. But if we start to see different data these next few months, and there starts to be revisions back close, the other way.
Exactly what I think's coming. Yes.
Start to tell us something too. I haven't seen any of that yet. I think everything's been moving in that bearish direction, but that's also because we've just seen mortgage rates peak, right?
Yeah,
mortgage rates peaking is the first part of the cycle.
No, absolutely right.
That looks like it's in our rear view mirror. So mortgage rates peaking, and then it's transactions peaking, and let's start to see what that does to these models.
Absolutely. Well, Lance, thank you very much. It's going to be an amazing article, folks. You got the full breakdown here. Lance, what is your Twitter handle and where can people find your stuff?
At News Lambert, or they could just Google Lance Lambert Fortune.
Awesome. That's such a cute picture. Thanks, buddy.